Stocktake is brought to you by Intelligent Investor, Australia's leading value investing research house. Get your free trial by heading to intelligentinvestor.com.au. The information in this podcast is current on the day of recording. It is general advice only, does not take your personal situation into account, and may not be suitable for you.
Good morning, everybody, and welcome to the first edition of Stocktake for 2026. I'm John Addis, founder of Intelligent Investor, and I have two incredibly rested and highly energetic people who are going to talk about GLP-1s, PWR Holdings, and we're going to make, unusually, a few predictions for the year ahead, which will probably be wrong, but it's just a bit of fun. Gaurav, welcome to 2026 and the first edition of the year. How are you doing?
We're here. Well, much happier now that we're waking up early, starting podcasts, and and the schedule is back,
isn't it, from normal life.
Yes. No, actually, I love the structure that work provides. I struggled with all this idleness and spare time that the holidays gave me. So I'm very, very happy to be boxed back in again, ankle tied to the desk.
Yeah,
fed through a glass tube and all the rest of it.
I resolved a long time ago that I'm never going to retire.
Yeah.
You know, I just don't like gardening, hate golf. I'm just going to keep working. Nick, how are you doing?
Good. I didn't struggle as much on my break. I really enjoyed it as Gaurav, but no, I'm happy to be back. Feel like
Did you go to the Gold Coast?
I didn't go to the Gold Coast. I stayed well clear. I try and stay well clear of a lot of those places during school holidays, to be honest.
Absolutely. Yeah.
It's probably a wise thing to do, having just gone there myself, Nick. There are children everywhere. And I left thinking, I always, as a parent, as young children, you always worry whether you're doing the right thing, whether you're a good parent, whether your kids are doing okay. And then all you need to do is go to the Gold Coast, spend a couple of days there, and you realize, wow, we are raising two geniuses. And we are doing a wonderful job.
That's the kind of sentiment that you'd expect from the Upper North Shore in Sydney.
Yes.
Okay, let's get started. We are going to talk about GLP-1s. GLP-1s are the new drug that's taking over the world to deal with obesity. And we're going to talk specifically about the second order impacts of GLP-1s because they are starting to have an impact on all sorts of different sectors because they address cravings. And we decided to talk about this because we used to have a stock called Diageo, which is a UK alcohol company, on our buy list. And we decided to take it off for reasons that Nick will explain. But one of those is that they are facing a lot of headwinds. Firstly, the fact that young people tend not to be drinking as much. It's much cheaper to get gummies than it is to get a bottle of gin or a bottle of vodka. And also, there is the effect of GLP-1s, which have been found to reduce alcohol cravings as well. So we know that alcoholics are a big consumer of alcohol, and that's having an impact on alcohol-related stocks. So, Nick, let's kick things off, and maybe through the lens of Diageo. What kind of role do you think GLP-1s are playing in the alcohol market now?
Oh, I think they are playing a big role. It is very hard at the moment, not just with alcohol, but with a lot of these categories, to work out what is the effects of weight loss drugs and what are the effects of inflation and people just reducing their spending because things have got more expensive. So both of these are happening at the same time. But I guess the big worry, if you just look at something like Diageo, is sort of the concept of power users, or the Pareto principle, which is essentially 10 to 20% of the heaviest users consume about 50 to 70% of all alcohol sales. So the top 10% are more likely to be overweight. And if you change the behavior of a few percent of these mega users or power users, you can see volumes start to fall really quite quickly. And that's sort of potentially happening. We haven't got a lot of data yet, but what we do have data on is obesity rates overall, and they are falling. So in America, obesity peaked in 2022 at 40% of, I think it was all adults or maybe all people, and that's since fallen 3% to 37%. So in 3 years, and the uptake of these drugs hasn't really, hit the whole population yet. Yeah, it's just starting. You've seen a reduction in obesity. And if this continues, I think it's just going to be, a consistent headwind for alcohol stocks. It's not that no one's going to drink alcohol. It's just that they might drink a lot less than they used to, or save it for special occasions. And that's just a headwind to sales. But it's not just alcohol. It's other categories like soft drinks, sugar, potentially chocolates, salty foods.
Fast food.
Yes. Yeah. And then there's going to be some beneficiaries, so there's already early studies suggesting bottled water sales are rising because those consumers, ditch soft drinks and pick up bottled water, and some like chicken, fish as well, potentially will see benefits. So there's lots of puts and takes, but yeah, that was one of the reasons we came to sort of our sell decision on Diageo, which just thought the headwinds were a bit too much. There were some others as well. They had a fair bit of debt. The CEO had just left, and as you spoke about, potentially younger consumers aren't drinking as much as they used to as well.
Yeah. Gaurav, what are your thoughts on the alcohol-related second-order impacts?
Well, let's begin firstly with these GLP-1s, because in the meeting where we were discussing this, my view was that we actually talked about AI, and I said to the team that I think the great change in our lifetimes, yes, AI is going to be really important, but the GLP-1s I think will be a more fundamental change to society than AI will, and I think that just comes from a view of human nature that where I think humans prioritize vanity over knowledge, and there is when you can have.
You should put that on a T-shirt.
Yeah, a bumper sticker.
And some bloke will say, "Well, when you look like that, I'm not surprised that you say."
I've long been an advocate for these, for this way of investing that kind of uses the 7 deadly sins, and I think when it becomes so easy as to take a pill, and the pill version of GLP-1s, the first one was released, when was it, Nick? Late last year, early this year by Novo Nordisk.
The first one was released quite a long time ago, and we should go into a little bit of the history. I mean, these drugs came out of an insulin company called Novo Nordisk.
No, but the pill version.
The pill version is coming out this year, I believe.
No, I think it's been released.
Oh, is it? Okay.
Yeah, I read that it had already been released. But anyway, they're not the only ones. Every company is working on this, and it just reduces the friction of taking these drugs. And I think we're going to end up, where they basically become like vitamins. I mean, I think 70-80% of people are going to be on them, and there's a bit of a network effect with these drugs, because the more people that take them and the fewer overweight people there are in society, the more pressure there are on the recalcitrants to take them as well. It becomes socially unacceptable to be overweight the fewer overweight people there are. And there's just I think that pressure is unbearable. The Economist did this big thing about bald men, and how it's really unusual that so many young men losing their hair are flying to Turkey, and baldness rates among young men have collapsed because so many are getting treatments for it. Yeah, and that's a similar sort of phenomenon.
No, that's right. You can see shots on social media of people coming back on a Ryanair flight from Istanbul to Manchester. It's just full of these blokes with little strands of hair sticking out of their craniums.
Yeah, and that, I think that's a direct result of the social network effects that have created an acceptability for hair loss, and exactly the same thing, amplified 1,000 times, is going to happen with GLP-1s. I think this is going to be a drug that the vast majority of people ultimately end up taking, and it's because it's going to be so ubiquitous. It's really important right now, to start thinking about these second-order impacts. And Nick has, gone through the case for alcohol. Alcohol is just the tip of the iceberg. I think the food consumption patterns, gambling, anything that relies on sort of compulsive behavior, it looks like these drugs do moderate compulsive behavior. We need to start thinking about these second and third order impacts.
This is already being transferred into commentary from management. So Brown-Forman, which is a US company that owns Jack Daniels, they've already in earnings calls said that GLP-1s are affecting demand. Nestle and Conagra, two sort of huge food companies, are already adjusting their product portfolios to say it's GLP-1 aligned or compliant, or so they're developing targeted food products for people on GLP-1s. So I think you're probably right. I think this is a life-changing drug for many, many people, and it's going to change a lot about patterns of food consumption and alcohol, tobacco, maybe even psychiatric treatments as well. There's some early evidence that they're quite beneficial for patients who are on psychiatric drugs too. So
it looks like protein consumption tends to increase. So one of the stocks, I've got 2 stocks on my list to look at over the next month or so. And both of those stocks are related to protein, and I think it's interesting that.
What stocks are they?
Ingham's and Guzzi's. I think both are pretty interesting. And Guzzi's is running a promotion at the moment where they double the amount of protein for a couple of bucks in every meal, and they are saying it's to do with higher protein consumption from young people. They haven't really labeled it as GLP-1s, but
right.
I think those impacts are intermingled, and there's got to be some element of GLP-1 impact on higher protein consumption as well.
Okay, so let's talk about briefly, the 2 companies that are dominating the GLP-1 market. That's Novo Nordisk in Denmark and Eli Lilly in the US. Eli Lilly was a laggard. They've now caught up and are probably taking market share. Well, certainly taking market share from Novo Nordisk. The interesting thing about it is that Eli Lilly trades on a PER that is twice that of Novo Nordisk. Novo Nordisk is currently on about 15 times earnings, I think, which is what it was before it invented GLP-1s.
15 times earnings, is that right?
15, yeah. It's unbelievably well.
It's a lot lower than I thought.
It's come a long way back from where it was. I think it looks quite interesting. I'm not going to make any recommendations here. We're not going to do that. But these are the 2 companies that you should be looking at if you are interested in this marketplace. There are others who are developing GLP-1 products, but these 2 are clearly the market leaders, and they've got a long history in this marketplace. So that's where you should be looking and thinking about these things. But I think what percentage of the US population are taking GLP-1s now? I think it's 1 in 8, isn't it? Something like that.
Yeah, I think it's about 12%. Yeah, so 1 in 8.
In some areas, it's 1 in 3 in some wealthy jurisdictions, and in those areas, you can see fast food consumption change. All the patterns that we've been talking about, clearly evident in those wealthy areas where people, sort of a third of the population's on GLP-1s.
Yeah, they're going to the local compounding pharmacy where it's being made up illegally and being sold to people who don't actually need it, but would like to lose a couple of kilos.
Yes.
Yeah. And it's like America's really the canary in the coal mine here, because not only they have the highest percentage of overweight people, but because their pharmaceutical industry is so profitable, there's been a manufacturing glut or manufacturing shortage. And so these companies have really been putting the drug, positioning the drugs in the US first. So we haven't really felt the full effects of this in Australia yet. Or have they felt the full effects of it in Europe, Asia, and a lot of other places? So I think this is a trend that's going to last for decades. And John, you spoke about the 2 companies that could be positioned to do well. When behaviour changes, think about say birth control pill. We always underestimate just how many beneficiaries and how many losers there will be from that change. I've heard some crazy ones with GLP-1s that airlines will be a big beneficiary because they'll see fuel savings.
Yes, that's true.
Yeah.
I mean, fuel is about 20% of an airline's operating costs. That's a huge saving if you're not carrying. It also makes traveling a little bit more comfortable.
Yeah.
Airlines. They'll just squeeze the seats smaller and get more people on those planes.
Oh, that's exactly what will happen. Yeah. Okay, look, we're going to move on from GLP-1s. We're going to talk briefly about a company that produces cooling systems for Formula One cars, which has now developed a new business selling to US defense companies. We had it on the buy list last year. Gaurav, tell us about, and I'm surprised that you went to the Gold Coast over Christmas and you did not go down to see PWR's new factory on the Gold Coast.
Oh, I tried. Believe me, John. Both my boys for Christmas last year, they got shares in PWR. And, we've gone through the.
It's almost child abuse, isn't
it? They went through it. They know the business.
There are these things called footballs that make really good presents.
Cricket bats.
You don't give kids depreciating assets. You don't give anyone a depreciating asset. It's only things that go up, John. I tried, but I didn't quite get there. But yes, PWR. I did an update on that. By the time this is out early in the week, and the news we got out of January was quite encouraging. Unfortunately, the market was right on it. Sometimes in January, so many people are away. You can sneak in good news, and it's not always incorporated into the price. And there's sometimes inefficiencies to be had in the holiday period, but not so this time with PWR, because the share price went kind of bonkers when it was revealed that an order that they had with the US Department of Defense had been extended. They haven't given much details about the actual product itself, but I understand that they're working on providing cooling for an entire platform of defense arsenals. So it's not just one product; it's for a whole series of, and they're calling this a platform. So it involves multiple items across a whole different array of products. Mm-hmm. And the first tranche of that platform, the first contract tranche was won last year, a small $5 million amount. Second tranche was won in January this year, a 9-point-something, these are US dollars, $1 million amount. And management, which are generally very conservative and are not prone to over-exaggeration, they appeared quite upbeat and said almost for a certainty that there'd be further wins along the way on just that single platform. And I think what's most exciting about this is that it firstly validates a very risky strategy. The PWR had a cozy monopoly in F1. They provide cooling systems for every car in every race on the grid. And there's a new entrant, a new team coming in 2026. So they've got that contract locked in as well. So there was embedded growth coming from F1. The logical thing may have been to expand into other, sideways movements into other races. They haven't really done that. Instead, they took a big gamble, and they were chasing growth in defense and aerospace. And to do that, they had to invest in extra production capacity, which means moving their entire offices and production assets to a new facility, which was incredibly disruptive and expensive. And then they had to, I think it's been 4 years of them just spending money on compliance and research to get these products approved and developed before they're even able to present them to potential customers. So a lot of upfront cost, and there was a lot of skepticism in the market about whether that would be repaid. And I think what these contracts show is that, yes, all that cost and effort is being repaid. The strategy is working. And that's why you've seen such a big rebound. And that's why it's quite a big deal. Even though these are nominally small amounts of money, it shows that the strategy is working.
Yeah. We should say to listeners that PWR makes radiators, and it was started by a guy called Keys Wheel, who is famously quoted as saying that he eats, sleeps and shits radiators. He's now stepped aside. Is that right, Gaurav?
Can I tell you a funny story about Keys? When we were there 2 years ago, we went to, I don't know, you guys weren't with me. I went with a bunch of friends to a factory tour at the AGM where they did a factory tour.
I was there for that.
You were there for John. That's right, John.
I was there too.
Nick was there too.
Yeah,
that's when we went to Eagers, if you remember.
Yes. No, sorry. My error. They do a lot of trips now with different people. I keep forgetting. Yes, but before the Great Stakes came out, I went to the bathroom and right next to me, this bloke walks in and dressed like a farmer, like in a hat and overalls and stuff, and then he just says to me, "So what do you think?" And we're both there in the urinal. He broke the cardinal rule of men's toilets, which is you don't talk and you don't look. And I look over and it's Keys. And he just starts, we had this small conversation,
When he said, "What do you think?" What was that in reference to?
My mind didn't go there, but geez, I may have answered the wrong question. But he's such a unusual CEO, and watching him just walk around his own business, everyone loves him. Everyone loves him. He knows everyone. He does things like stack the chairs. I always think the behavior of CEOs in their own sort of domain is really interesting. Are they the kind of monarch who sits back and directs everyone, or do they actually get their hands dirty and dig in and do stuff? And I think that's always fascinating. And Keys is definitely the getting the hands dirty kind of guy, and speaks to everyone very plainly. He's now in the chairman role. He's retired as a CEO, and they've got an interim CEO at the moment, but there'll be someone else taking that spot. I may have actually filled that spot. I've got to brush up on my notes, but he's still with the business, and I think that's important.
Yeah.
I was just going to say, I think they have filled the CEO spot.
Yes, they have, haven't they?
Yes, yeah. And I was actually going to bring this up.
Right?
It was, but I think it's a potential worry. So they filled the spot with Sharon Williams, who was their CFO. She joined the company in January 25, so about a year ago.
Mm-hmm.
Previously to that, she was the CEO of G8 Education. Oh, sorry, the CFO of G8 Education for about 8 years.
It's one of my least favorite businesses.
Yeah.
Yeah, and so like potentially not the best resume, but I think the bigger issue here, and I've seen this with some companies overseas in this area, is I just really, really hate when an engineering or a know-how business, an industrial business, appoints a financial person as CEO. I just like it. It really, it gives me the famous example here is Boeing and they did it for 2 decades and eventually ended in disaster. And we've spoken about that before, but it happens at other businesses as well. And I know it's just something I dislike. I love everything about it's the only thing I pretty much don't like about PWR. The move into aerospace is fantastic, but I just thought that selection was a bit weird. I actually thought they were going to make the interim CEO a permanent pick, who does have an engineering background.
Yeah, he actually addressed that at the most recent AGM. So he was Matthew Bryson, I believe his name is. He's been with the business more than 20 years. Started out as a young fellow and worked his way up through the business. Apparently, my people I know familiar with the business tell me that he's brilliant and a big part of the engineering success of that company. I think he's the second largest equity holder in the business as well after Keys. So he's well incentivized to stay there. He was offered the CEO role, but as a technical person wants to keep doing technical things. So he turned it down. And he's still in the COO role. So he's still a very senior person. And I'm glad he's still with just doing the business, doing his technical wizardry. So, but that's an interesting technique. I haven't actually heard that before, but what you say rings very, very true.
Yeah. And potentially that offsets a little bit of those risks as well as, that person is actually the one driving a lot of the decision making. Yeah.
Okay, well, that's something to watch, but this is a very interesting company. I have to say, when we did the factory tour, some of the things that we saw, it's almost art, the way that they build radiators. They are astonishing looking, astonishing shaped things. And the kind of business that you have all sorts of competitive moats to, I think, just by virtue of the fact that you're doing it at the very highest end of the market, with skilled staff who know exactly what they're doing and they've accumulated decades of experience doing it. It's a very, very good business to be in because it's so hard to replicate that kind of experience and expertise. Okay, let's move on to some predictions. I have my own, which are suitably mad. Let's start off with you, Nick. What's your prediction for 20? Actually, let me just say that we do not do predictions in this business because the future is unknowable. We're only doing this for a bit of fun. Please don't take it too seriously. But let's have a little bit of fun by hearing what Nick thinks is going to happen in 2026.
And if this is a football prediction, heaven help me, I'm going to leave. When I walked in on the recording, these two were just jabbering on about football.
Thomas Frank has to go. I predict Thomas Frank will he might survive the season, but he's no way is he going to be there in 12 months' time. Okay, Nick, you go.
I'll save my football prediction to the end. No, my first prediction is I think this is the year where investors and non-investors start to think about and talk about self-driving cars a little bit more. There's been a lot of hype around this technology for a long time, But a few of the moves Waymo has done recently suggest that I think they're pretty confident that the technology is right now, and they've got the data to back that up. So they started in Phoenix about probably 5 or 6 years ago. That application was very limited. It was really limited to a suburb that was flat grid system. They've since gone to San Francisco, where they've now overtaken Lyft as the second biggest ride-hailing app in that city. They've expanded to Los Angeles, and they're about to expand to 15 other cities. So they did 14 million trips last year, and they're planning to do 1 million trips a week by the end of this year. And I think this is the year that people really start to think about self-driving vehicles. And I think the technology is actually getting there, and Waymo's expansion, I think, is a signal of that.
Yeah, I think that's bang on. Gaurav, have you got any comment on that?
No, I agree. I think the progress in these automated vehicles is astonishing. I'm surprised EV sales aren't higher, actually. I think I'm on record as saying I don't like EVs, but that's because I'm a car nut. But for the general population, it just makes so much sense to buy an EV. I don't understand why more people in Australia don't do it.
Well, the charging infrastructure is pretty poor, to be honest.
Yeah.
If we had what China has, I think you might see 50% of sales being because we're perfectly set up for it, because you can charge your own vehicle at home.
Exactly.
Because a lot of people have solar panels. It just works perfectly.
Exactly.
But that will happen. I'm sure that will happen. The economics of it are just too attractive. And Chinese cars are rolling out very successful self-driving software as well, Chinese car companies.
Although, did you read that the British had discovered that there was a kill switch in Chinese-made electric trucks where Beijing could turn the truck on and off remotely? Yeah. And this is not a made-up conspiratorial thing. This was confirmed by the British. Yeah, that's terrifying.
Okay. I can't see why they would want to do it, but I think there's a lot of paranoia in that kind of discussion. But one more point on this self-driving car thing. If you look at Tesla's sales are falling through the floor. They are losing market share just about everywhere. The share price back around this time in 2023, so 3 years ago, was $113. It's now $437. That increase, I think, is largely down to the fact that Tesla is being positioned now not as a car company but as a robo-taxi company, and that is because robo-taxis are going to be a thing, and Waymo proves it. I think one of the big stumbling blocks was regulators or the legal argument, where some people are going to die when these robo-taxis are on the road, and they're going to have to deal with some legal suits for having killed people. But regulators seem to have accepted the fact that having a robot drive your car is far, far better than having a human doing it. You can see that in the numbers now, and they're convinced of that. So I think they're going to be, the regulatory barrier is lower and lower and lower, to the point where this is something that's going to be rolled out very soon. Gaurav, let's hear from you. One of your predictions.
Yeah, look, I am increasingly very concerned about the United States. I think this is the year where the US dollar loses its status as the reserve currency. I think it's already unofficially there, but I think it gets recognized. And I say that because markets are telling you that already. This is not really a prediction. This is more of a statement of fact. I think it's already happened. I mean, you look at any hard commodity price. The movement in gold can only be explained by the loss of trust in the US dollar. The Chinese, the Russians are all quickly pricing commodity sales in their own currency. I think the Chinese now, if even BHP is paying out 25% of its sales to China in yuan, and I think that just accelerates. The Europeans, they're building their own independent defense capabilities, which no one thought would happen. I mean, these are monumental changes that are going on, and I really don't think they're getting enough attention from financial markets, although they're getting plenty of attention from some armchair observers like myself. But the financial markets are going to have to catch up to this, and I think the trigger may be this appointment of the Fed chair when it happens. I think it's in March. I think that's another loss of credibility for that US dollar. And if you want to find some sort of hard asset gold. I'm even considering buying some Bitcoin. Like I just think you want to have some protection from non-US dollar assets.
It's funny. Nick sort of giggled a little bit when he's in Gaurav.
Yeah, it's absurd, isn't it? But I don't think. But I think the markets are usually very, very good at gathering and pricing change. But sometimes the change is so wild, and it takes a while to become apparent. And I think that's what's happening. That's exactly what's happening now. So adjacent markets are all acting as though the US dollar is toast, and I don't think mainstream financial markets have come to that conclusion yet.
No,
I think they will.
Okay, well, my prediction is on similar lines, but probably different to yours. I do remember a couple of moments last year when I was saying that, was it year before, the feeling of embarrassment almost when I said I think the US is going to fail as a democracy. Trump is going to get reelected, and he will make a push to become an autocracy. I think the US I think it's inarguable now that this is a push towards autocracy. I think the progress that they've made in doing that over the past 12 months has been astonishing. And I think there's a very good chance that this year markets will acknowledge that the US has become a fully fledged autocracy, and they won't care one bit about it. I think stock prices could easily rise having accepted that fact. And I say that because of the recent events over Jerome Powell, who has stood up to Trump, and he's basically won. And I know that he's going to go, but he's going to remain on the committee, I believe. He just won't be chair, but he still will carry weight there. And I think financial markets are pleased to see him win. And the conclusion that I've drawn is that you can invade Greenland. You can turn the Justice Department into a political weapon. You can continually lose a trade war, but don't mess about with my 401k. That's where the line has been drawn.
Yeah. Well, there's a militia now roaming the US. There's a federally backed militia. This is extraordinary stuff, really extraordinary. And it's amazing to me. Financial markets are just completely waving all this off, and at the same time, the fiscal position gets worse. But it impacts money. I care about money too, John. It impacts.
Yeah, I know,
money.
But it's markets have got a very, very short-term understanding of these events. I don't think that financial commentators are primed to view things through a political lens. I think they're generally ignorant about politics. They see things through an economic lens rather than a political lens. And when those two worlds connect, which they have now, I think markets are very bad at pricing in this long-term risk. Autocracies do not perform well in an economic sense. You look at Turkey, for example, when Erdogan sort of took over and sacked the central bank in Turkey, and inflation went from 18 to 80%. You look at Hungary and look at their performance over the last 15 years. Like economically, it's been a bloody disaster because it's all about corruption and lining the pockets of the elite who really run the country. And you can see that happening in the US now. Like, it's no doubt that Trump is probably the most corrupt president we've ever seen. And it's making no difference because short term, if you deliver tax cuts, if you can keep inflation under control, if you can wade through mergers and acquisitions, that's all good for finance markets. And the people who are driving this, big tech, there are no restraints on their practices, and that's what's driving stock prices. And I think that could go on for the next 12 months at least.
Well, it's interesting that bond yields have reacted, even though the Fed has cut rates. The end curve of the US bond yields are actually rising. And I think
that's the bond market. It's not stock prices.
No,
it's very different.
It's always worth. If you're an equity investor, they do not ignore that yield curve. Yeah,
I agree with that. Okay, Nick, one more.
Well, I actually have a very similar one to what you guys have been speaking about, and mine was just simply that I think US interest rate policy has the potential to wreak havoc this year. I think you could have a situation like, you spoke about Gaurav, where a sort of a political appointee becomes the head of the Fed and immediately starts lowering rates. And then on the other side of that, you have all this AI capex, you have real GDP growing at about 4 to 5%, you have an extraordinary amount of fiscal spending, not just in the US, but around the world. And it really risks overheating the economy. I think, you guys were speaking about how markets haven't reacted to this. I think one of the linchpins here is actually the Secretary of the Treasury, Scott Bessent. I think markets have taken an extraordinary amount of confidence that he is there. But if you look back at Trump's first term, all the sensible people, by the second year they started leaving. Either they were fired, resigned, whatever it may be. And I wonder if, not that there's too many sensible people left, but I wonder if you have a situation like this happen this year, and you could if the Fed independence goes, you could have potentially a spike in bond yields, like the exact opposite of what they want, as foreign investors really question US exceptionalism. I would say that this is not my base case. I'm not as probably convinced as you are, Gaurav, that the dollar is going to collapse. The dollar has fallen this year, but if you that's just looking at it at 1 year. If you look at it 5 or 10 years, it's risen an extraordinary amount. So we're only really back to where it was 2 or 3 years ago. So we haven't seen the real effects of a run on the dollar. And I think these things actually take place over decades, but something like the Fed could bring it forward, or something nastier like a major conflict.
Did you the famous quote from Valéry Giscard d'Estaing in the 1960s when he called the US having an exorbitant privilege? He was a French finance minister at the time, and was saying that having the dollar system allows the US to run deficits far, far bigger than anybody else, buy foreign goods cheaply, and that's just the extraordinary privilege of having the world's reserve currency. And you can see no better evidence of that now. Like the US deficit is huge now, and there's no sign of them addressing it at all. And yet the US dollar, it might be what Gaurav's saying might be correct, but it's still the world's reserve currency, and I don't see what can really replace it.
Yeah, and I think that's sort of what I'm getting at. People point to China as, that's the next power. I don't think they're ready to take that position yet. I think we could actually be seeing a situation in the world where we maybe have a power vacuum for a little while, and that could be potentially disastrous, because power vacuums usually lead to conflicts. But you've seen the destruction of alliances. You're seeing even Russia and China lose standing in some parts of the world as well. It's not we tend to focus on America a lot as the main characters of the world, and even more so now that Trump's involved, because he sort of demands the world's media attention. But to your point there, John, about US having extraordinary privilege. I mean, Italian debt to GDP is very high. Japan's very high. It's not just the US. This is widespread.
But I'd say there's the difference is that the Japanese debt is financed by domestic savings, and US debt is financed by the Chinese.
And the Italians have Europe as the cushion. They got the Europe's got the Germans. So I think in those situations it is different. If the dollar did break as a reserve currency, that would be a massive problem for the US in a way that it wouldn't be for Japan or European nations. And Japan has already had its depression. Like they went decades of zero growth, right? So they've hardly gotten out of their financial crisis scot-free.
Yeah. Okay, on that encouraging note, I think we'll end it there. We've ranted enough. It's nice to have you both back.
I had one. I had the second one.
Oh, did you? Okay, go on then. One more.
I think...
Let's amaze people even more, shall we?
No, this is back to stocks. But I reckon if you're still buying growth stocks, like we all of last year, at Intelligent Investor as a house, we all universally had a view that growth was completely mispriced, and there were crazy prices being paid for high quality stocks. And you've seen what's happened over the last 12 months, that these things have halved or more. And I think if you don't, the value has had a terrible run of it. You can see from some of our returns that value has been difficult. And I think now is the time to buy value stocks. valuation really matters. And I think we're at the point of the cycle now where you want very strict valuation discipline, high free cash flow yields, not necessarily statistically cheap pricing, but defensive cash flows, high free cash flow yields, dividend yields. These sort of things I think matter at this point of the cycle.
Yeah. This isn't about getting out of the market. It's just getting the stuff that offers value. And if there is a big fall, then you're likely to be more protected from it by having those kind of stocks.
Yep.
Okay. Thanks, Gaurav. Thanks, Nick. Thank you to producer Greg, who's got some editing to do on this podcast, I feel.
Oh dear. Poor Greg.
Nice to have you both back, and we'll be back in 2 weeks. I will say that we do have some deep dives planned. These are special members-only podcasts. We've got 2 planned. We're probably going to release them after reporting season. Reporting season is coming up in 2 weeks. If you would like to join Intelligent Investor now, it's a good time to do so. You get all of our reporting season coverage. You will see all the stocks on our buy list, and you will get access to 2 deep dives that we have in the works. Just go to www.intelligentinvestor.com.au to sign up.